It normally decouples at this point in the cycle anyway, because it starts forward-looking. Now, liquidity is actually financial conditions drive liquidity, and so crypto's been following financial conditions. So it suggests that liquidity comes back. So, but then in the full bull market phase, it normally does decouple. So I don't think it's doing anything unusual whatsoever. And we're now a $3 trillion asset. You need more institutions in to drive the asset higher anyway. People forget that. Like, the institutions here, it's amazing. Well, it has to be. If you want 100% rise, you need larger pools of capital now because it's a much bigger market. So, and over time, I think, yes, we get product market fit. I don't think AI is the product market fit currently. I think that's all narrative based versus the reality of where it is. But look, overall, the trends are all right. And we haven't even got the bloody administration in yet. We haven't got the clarity that we're all waiting for. And everyone's kind of a max fear right now. It's crazy. But that's a good setup, right? It's just a good setup for the year.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal delves into some analyst fears and the notable crypto pullback experienced in early 2025, discussing whether the infamous banana zone has finally ended. Let's catch him up to know more.
Okay, so that is just the phases of how the banana zone tends to play out. You tend to get the first spurt. Bitcoin went from 50,000 to 100,000. It then corrects a bit. Everyone freaks out. I mean, it's ridiculous. I mean, it's literally ridiculous, the people freaking out from a correction like this. And then you usually get the alt season part. And that's when any moron can make money, including myself, in anything that you hold. And that is the alt season. That usually, in full throttle goes through till, let's say, April. And then it tends to get more selective in the final phase where they concentrate on the key themes. So everybody's asking about, I put a big thread about it yesterday. Has the market topped? What's going on? Is that M2 chart going to play out? Are we all fucked? Is it going down to 75,000? Yada, 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 yada. I mean, it's all day. And then it's like, oh my God, the Fed aren't going to cut rates. That's the end of the market. They can't, just so much noise. What I urge people, I wrote, I think, in response to you, OV, is 2017-16 was a near identical setup. So the market has been following the pattern. But outside of that, Trump got elected. Everyone went, oh shit, tariffs. They're inflationary. The dollar screamed higher. Rates went higher. And then what happened was Trump came in and said, we need to get a lower dollar. Scott Bessent's already talked about it. The other guys coming in as the Economic Council guys already talked about the dollar being a problem. So I think they're using the dollar as the stick and will then offer it as the carrot to the Chinese, the Canadians, the Europeans, and everybody else, which is, if you agree a trade deal with us, we will help lower the dollar.
Bitcoin is making headlines again as it hovers around $94,000, having recovered from a brief dip below $92,500. Market watchers are on edge, questioning whether a deeper retracement to $75,000 is likely. Yet Real Vision founder Raoul Pal remains unfazed, debunking the notion of a crash and suggesting that the market is still in the banana zone. The banana zone, as Paul describes, unfolds in distinct phases that shape Bitcoin's price trajectory. The first phase is a rapid surge, such as the jump from $50,000 to $100,000. After this dramatic climb, Bitcoin usually corrects, triggering panic among investors who fear the rally might be ending. However, Pal emphasizes that this is simply a predictable part of the cycle before the onset of alt season, when other cryptocurrencies take center stage and see significant gains. Pal has drawn parallels between the current landscape and the 2017 cycle, noting that back then, external forces like the US dollar's fluctuations and geopolitical events under President Trump also cast uncertainty on the market. Yet Bitcoin continued to rise, buoyed by evolving liquidity conditions, According to Pal, today's scenario exhibits similar characteristics, indicating that while short-term corrections may occur, the overall broader market structure remains solid.
The dollar is a function of liquidity, which is why rates are so bad as well. There's actually not enough liquidity in the system, and I think that's sort of somewhat purposeful overall. But if we go back to 2017, and we had that setup of the dollar turning over and then rates actually came down for the rest of the year, the other thing, the Fed were raising rates all of 2017, and crypto went up.
Yeah.
US M2 went down. So all of the things you would be looking for, they were all in reverse. So what really was happening in 2017 was China had been beaten up by the strong dollar in 2015, 2016, and their economy was super slow. China increased the balance sheet and the Fed lowered the dollar. The Europeans did some QE and the UK did some QE. We got a near identical setup. The market is over-extrapolating tariffs and fears. Whatever rates do is irrelevant. It's what global money supply does, not global money supply, global liquidity does going forwards. We know back in 2017, the Treasury drained the TGA for the same reason. I mean, it's like literally everything is an exact rerun of what happened. So, look, I don't expect an exact rerun this time, but probabilistically speaking, there's nothing to be concerned over. Now, when we looked at that big M2 drop last time around, and this time around, it leads by about 12 weeks. So last time around, we had an identical M2 drop. You can see it. I don't know if you can share that chart you're looking at now after that one. So this one shows the near identical pattern in M2 back then versus now. What happened was the dollar weakened, global M2 went up. What also happened is the NASDAQ had a similar correction, crypto very similar. And what crypto did was didn't follow M2 going forwards because it starts to decouple as the bull market takes place. And what happened was it did an 8-day correction and did negative 35%. This time, it feels like it's slightly more sideways. Whether it goes a bit lower or not doesn't really matter. But the point being, you're looking for the bottom as opposed to a sharp acceleration from here. But either way, it's over pretty quickly. And then what happened last time around is the moment Bitcoin hit a low, alts took off. And so that's my general thesis on all of this right now. This is pretty much playing out exactly as I've been expecting it to play out. And whether that's in liquidity terms, because it's a rerun, because we've got this debt cycle, it's the same bloody thing, right? So that's my overall view. It's like it's all fine.
The crypto market is abuzz with warnings of heightened risk as Bitcoin navigates a potential turning point. Willie Wu, a Bitcoin analyst, cautions traders to exercise restraint in the coming months, noting that profit-taking is likely to continue before the market can fully reset. Despite Bitcoin's strong bullish sentiment, Wu highlights his local risk model, which he says is flashing levels not seen in a while. Meanwhile, the Fear and Greed Index shows a greed rating of 69, up from 50 on January 10. Bitcoin's price has retreated from its psychological barrier of $100,000 on January 8 and is now near $94,120, according to CoinMarketCap. Some fear this slide may persist, but others remain optimistic. Trader Rec Capital notes that Bitcoin's 15% pullback from $108,000 on December 17 mirrors past cycles, suggesting a solid chance of reversal. The latest non-farm payrolls data from the United States, indicating a robust labor market, briefly weighed on risk assets, yet many view the dip as temporary. CEO of Jan3 argues that all dips are fake, orchestrated by influential players looking to accumulate at cheaper prices. He believes understanding the bigger macro picture shows Bitcoin's fundamentals are intact, despite occasional short-term turbulence. El Salvador is capturing global attention with record-breaking tourism driven by its embrace of Bitcoin and major safety reforms. A new report from Santander U.S. Capital Markets reveals how the country's bold cryptocurrency policy has turned it into a hot spot for curious travelers. The government says 3.9 million visitors arrived in 2024, a 22% jump from the previous year, with many hailing from the United States for a first-hand look at Bitcoin's real-world applications. Banco Santander, one of the world's largest banks, notes that reduced crime has played a crucial role in this tourism boom. Homicides dropped to 114 in 2024, improving perceptions of El Salvador as a safe destination. Tourism now accounts for 11% of the nation's GDP, outpacing other regional hotspots. President Nayib Bukele and the Bitcoin office see these statistics as proof that the country's digital currency push, paired with enhanced security, is fueling a revival. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.